Hello investors and traders, today I'll speak about the stock market update for today. We'll speak about the main indexes, about bonds, the VIX, and of course about the latest news in the US stock market. So let's start with the S&P 500. We can see it um, current level is 41.43. So generally speaking, it's a quite nice performance since the beginning of the year, but now I think in my mind that here it's a possible correction. Of course, here a decreasing channel, the first, the second, the third, the fourth, and the fifth. But now there is a lot of issues about the inflation, the Fed rate, Fed fund rate, and of course Jerome Powell, his rhetoric. So let's move to the latest news. So Fed Chair Powell gave an interview to one of the chairman of private equity giant at the Economic Club of Washington. So what he said, Jerome, yeah, he is saying that the disinflationary process, the process of getting inflation down, has begun, and it's begun in the goods sector, which is about a quarter of our economy, said Powell, but it has a long way to go. So these are very early stages. And of course, all the indexes, all the Nasdaq, S&P 500 like it so much yesterday. He also said that surprisingly strong US economic data like last Friday's employment report could force the central bank to raise its policy interest rate more than investors have priced in. And the reality is we are going to react to the data. So if we continue to get, for example, a strong labor market reports or higher inflation report, it may well be the case that we have do more and raise rates more than it's priced in. So the number one spot is the US inflation. We can see that the last figure is 6.5%. Of course, the expectations that it will continue to decrease towards the end of this year, but of course we will see, we will check. But here is another problem that Jerome is saying that if the inflation will, for example, be 2%, 3%, so the Fed rate won't be not 4.75, it can be maybe 5-6%. So I'm not sure that the markets are taking into account this moment. Anyway, the indexes, the Nasdaq, let's check the Nasdaq performance. Since the beginning of the year, very nice performance, about 15% up. And let's move to the bond market, the TLT, US Treasury bonds. We can see that now it's 105. It's ETF on a US Treasury bond on a 20-year plus. He doesn't like all this stuff about the decreasing on the inflation. Of course, all the news that interest rates hike. But anyway, my target is 120. Another one, the DXY, the index dollar. We can see that now it's about 100. I'm thinking it going to come down. I think it's here a very strong support level 100. If we will break this level, so the next target can be 95, 96. So we'll see, we'll check. But I think that the hardest days for dollar are past, and now I think it going to be weaker and weaker. And let's have a look on the VIX, the index volatility. We can see that now it's less than 20. Generally speaking, of course, when we have bad times where we had market crash or some sharp decreasing in the indexes, it's jump. For example, here in the coronavirus, it's in one moment, in one day, it was higher than 80. So now it's less than 20. They're saying that the market are very confident. They aren't seeing any problems in the near term. So now the VIX is very low. Let's have a look on this chart. We can see that the US share buybacks authorization announcement throughout the February 1st. We can see that this year it's the highest level since last 20 years. So it can be the why of the reason why we can see the stocks and the indexes are rallying this year. Meta, Google, all the famous stocks showing very nice performance. One of the main reasons is of course the buyback. We can see it's more than 100 billion bucks just stock share buyback. Of course it supports the share price of the stocks, so I think it's very important to mention here. And another interesting chart, we can see that now the tech stocks doesn't share bond market's recession fears. The late 2019 saw similar divergence before curve steepened. So here when it was a market crash, look the forward PE. So usually the indexes falling, and of course the P ratio also decreasing. No, it's very logical, because when the stock market decrease, the P ratio also decrease, because here P divided by E, here the P is the price, stock price, so the P is declining, so it's logic. So the stock, this white line is here also decreasing. But here we can see this the yield, US Treasury yield curve is the difference between the 2 years to 10 years. So usually, yeah, when we have a stock market crash or stock market decreasing, so usually here this one it expected to grow, to show a growth. We can see it here, we saw it here. Here the COVID crisis, the corona problem, it was here. But here, because the inverted yield curve, we see that now the 2-year treasury bond, the yield is 4.2 and the 10-year is about 3.6%. So now it's in a negative territory. So it's so unusual for the markets. Last 5 years we haven't seen such case in the past. Usually, yeah, we see it's in a positive area, but now it's very strange. It's unusual case, and I think we haven't seen such case in the past. So here, yes, what I said previously 1 minute ago. Said, so the 2-year treasury bond is 4.4 and the 10-year 3.6. So actually it's inverted yield curve. So it's so unusual for the bond and the stock market. So generally speaking, what I think about S&P, about Nasdaq, it depends. It of course will depend by the future released economic data. If we'll see that the inflation will start and will continue to come down, it can give an opportunity to the Fed to continue hiking the interest rates. Maybe it will be 5, maybe 5.5%. You understand? If they will stop now and will start to easing their policy politics, so it can be the second wave of the inflation. So here the expectations and the forecast that till the end of this year the interest rate will continue to be above 5, but the inflation rate will towards the end of this year will continue to slow down, and maybe in the end of this year it will be lower than 2%. Of course we will check, I will update you with the stock market, but now I'm telling you that this case is very unusual, and the sharp and the temp that the US the Fed hiking its interest rate, we haven't seen such periods, such cases in the past. So if you like this video, press the like button, subscribe to my channel, and of course see you on the next time. Bye.